of Capital Market, which is being jointly organized by Student Council and Department of Commerce under the aegis of S.S.T College of Arts and Commerce. First and foremost, I would like to thank Founder Principal and Chairman Dr. J.C. Purswani, IQAC Coordinator Dr. Khushbu Purswani, and the management of S.S.T College of Arts and Commerce for taking up this initiative of arranging this faculty development program, that is this 3 days workshop on overview of capital market for the staff and the students. To tell you more about the Student Council, I now request Assistant Professor and Advocate Sunil Shah sir to come on the dais and say a few words about the Student Council and its activities. Over to you, sir.
Thank you, Padma Madam, for a nice introduction of the speaker. Student Council was established in 2012 at S.S.T College, and we normally organize webinars for the students by the students, and it has been for the students for upliftment, whether they can interact with with the industries. Further, we had been to Bombay Stock Exchange with Dr. Aditya sir when we had visited for 3 days continuously. Students' activities are that we normally interact with the industries, and they help the students for their overall development. Not giving much more time, I would be asking Padma Madam to take over this session. Thank you, ma'am.
Thank you, sir, for that introduction on Students' Council. Today we have amongst us Dr. Aditya Srinivasan as a resource person for our workshop on the overview of capital market. I'm very glad to introduce Dr. Aditya Srinivasan. He is a gold medalist in MBA. He has done his MBA in finance and he's a gold medalist in that. He has also done his PhD in economics. He has done his MDM from IIM Ahmedabad, CWM, and he's also completed his DLIT from USA. He is a ISO 9000 lead auditor. He has more than 16 years of corporate experience and he has trained more than 65,000 participants. He has represented India at Harvard University, USA, South Korea, Japan, Maldives, Dubai, Turkey, Indonesia, and many countries. He is currently associated as the CEO and Chief Economist with Bombay Stock Exchange Brokers Forum, and he has conducted more than 2,000 sessions. Sir has also written and published more than 23 research papers. I am thankful to Sir for accepting our invitation to be a resource person for this 3 days workshop. Over to you, sir, with the session. And once again, I welcome you to S.S.T College of Arts and Commerce. And thank you for accepting our invitation to be the resource person. Thank you, sir, and over to you, sir.
Thank you very much, ma'am. Thank you very much for this kind introduction and giving us this opportunity. Ma'am, for last 8 years, BSc Broker Forum has taken up this initiative of spreading knowledge about financial markets, Indian economy, stock market, so that the students as well as basically faculties get practical knowledge. Ultimately, the objective is knowledge sharing. Ma'am. So I have a small PPT to share, and after that, we will go for a Q&A round. Just give me 1 second. See, today's theme is basically investing in these challenging times. Friends, we all are aware that for last more than 2 years, this coronavirus pandemic has hit the world economy. And today also, if you see, the world is under severe pressure with this third wave hitting India also in a big way. More than 2.5 lakh cases are regularly coming, and that has really created a pressure. Even in this scenario, friends, as far as Indian economy is concerned, we have been able to manage things in a far better way. If you see last 20 years, our average GDP growth has been in the range of 7.5 to 8% as compared to world average of 2.5 to 3%. So obviously we have relatively performed far better. If you see, currently also the world GDP growth is projected to be around 3%, whereas our GDP currently is at 8.4%. Just day before yesterday, IMF has again reiterated that Indian economy is likely to grow at 9% GDP. So one thing is clear, friends, that as this basically virus threats recedes and things start becoming normal, you will find Indian economy coming back on track and more foreign investments coming into our markets. If we try to see even a historical basically framework, then in the last 20-25 years, three major crises had come which had hit the world economy. The first was 2008 global financial crisis, during which, if you see, the world GDP was 1.5% as compared to India, which made a growth rate of 6.3%. So during that time also our growth rate was far better. Then if you see 2011 European Union crisis, world GDP was 2.5% and India was 7.1%. And finally 2015 China crisis, if you see, our world GDP was 3%, India was 7.5. So in that case, in all the three major crises, our economy performed far better as compared to world economy. And that basically becomes a key reason that large number of foreign investors, multinational companies, everybody wants to primarily invest in India and become a part of the growth story. Here, friends, there are certain key inherent strengths about Indian economy, that how our economy performs, how we are able to manage things. So that I would like to highlight. If you see, as far as Indian economy is concerned, friends, why even government is very keen that in the long run our economy will do well. The reasons are because of these three. Number one is demographic dividend. See, demographic dividend basically means large amount of workforce. Today we have around 70% of our working population less than 35 years of age. The average age of an Indian is only 26 years as compared to US 43, China 42, and Europe 47 and Japan 52. So practically speaking, friends, these countries are facing a problem of aging population, correct? So there the demand and consumption does not grow as fast as we are basically in a position to grow. So that also ensures that we are able to attract more amount of foreign capital into our economy, because our growth potential in the coming years is likely to be much better as compared to other developed countries. Second, if you see the domestic consumption part, whereby whatever we manufacture, around 80% is consumed in India only, and we export only 20%. So practically speaking, we are not an export dependent economy. That really helps us to ensure that we are in a better position to fight with the world economic slowdown. And third, most important, is high savings rate. See, India's saving rate is 27% of GDP. The world average is 21%. Frankly speaking, friends, our ability to save money has really helped us to basically tide any crisis, and we have been able relatively to perform well. So because of these three features, friends, one thing is clear, that Indian economy will grow well. And if Indian economy grows well, obviously stock markets and other things will also perform well. Friends, the COVID-19 has highlighted one thing very clearly, that basically those who had done good investments, had good financial planning, were able to fight out these 2 years in a more better way as compared to those who were weak, marginalized, and basically having lesser amount of income. Thus, basically, this particular point plays a very critical and a vital role, that your investments should be very sound. And that is why investing in these challenging times becomes even more important, because today financial freedom is the key to success. But this financial freedom one can achieve only if one has planned out the investments typically well. If you see, basically the first example is cash. Always remember, friends, that cash is one of the most important components, because if you have sufficient cash balance in hand, you can deal with any kind of pandemic or any kind of unproven situation that happens in the economy. For example, if your monthly expense is say 20,000 rupees per month, then 20,000 into 5 to 6 months, that means 1 lakh rupee should be there in your hand so that you are able to withdraw it immediately from your bank account or through your ATM, and you are able to deal with the things. So that is why cash is considered as an important asset class, which should be always in your hand to ensure that basically you are not having a problem in fighting it out any medical emergency or any untoward situation. So this is the first asset class which you should maintain. This is nothing but, friends, liquidity, sufficient liquidity in hand. Second, if you see, basically the important asset class is investment in stocks. Friends, remember that if you invest in quality stocks over a period of time, you are sure to make very good amount of wealth. That is for sure. For example, if you see, globally stock markets corrected by 30 to 35% last year when this coronavirus pandemic was at peak. In fact, our BSE Sensex corrected from 42,000 to 25,600. The reason was that in the month of March 2020, when the pandemic started spreading across the world, in that particular case, the FIIs had sold shares worth 61,000 crore. And as a result, markets tanked like anything from 42,000 to 25,600 levels. So basically, still it is considered as, though that time the markets crashed, still it is considered as an important aspect of investment, because had one invested during that time, friends, your money would have doubled in less than 1 year. Today, if you see, your money has totally doubled out. So that plays a very vital role when it comes to investments in stock market. For example, I would categorically say that in the month of March 2020, when basically Reliance was available at 900 rupees, HDFC was available at basically 850, and Infosys at 650. Had somebody bought these shares at a quality price, today the money is more than doubled. The point here I'm trying to highlight is that in your normal course, every month also, if you can keep on buying quality stocks, small quantity, 2 share, 3 share, but if you accumulate them over a period of time, obviously your probability to make good profits will be much more higher. Friends, if we take a chronological framework, okay, how primarily markets behaved in 2020 and 21, then in January 2020, markets touched an all-time high of 42,273 because FIIs invested 12,000 crore rupees in Indian stock market. So the markets were doing well. In February, markets invested 10,000 crore. Markets again were in good mood because FIIs had invested 10,000 crore. But in the month of March 2020, when the pandemic spread the whole world, FIIs became net sellers and they had withdrawn huge amount of money of 61,000 crore in 20 trading sessions. This was the highest ever selling done by foreign institutional investors. Friends, at that time, not only Indian markets but global markets also corrected heavily. Globally, the markets corrected by 30 to 35%, whereas correction in Indian markets were in the range of 38%. But trust me, friends, as it is aptly said, that worst times gives best investment opportunity. This was really the time to invest money in a big way. In April 2020, friends, when FIIs basically saw that India was able to implement the lockdown very well, at that time, that was appreciated by global investors and they reduced their selling to only 1800 crores in the month of April. And then, friends, from May onwards, they totally became net buyers only. And you will be surprised to know that ultimately 2020 became the year in which FIIs invested 1.68 lakh crore rupees in Indian stock market, and our stock market skyrocketed like anything. Even in 2021, friends, our markets gave a return of 23%. But in 2021, FIIs invested 26,000 crore, whereas our domestic mutual funds, they invested 76,000 crore. Friends, remember one thing, that stock market is an important asset allocation if you invest from a long-term perspective. That means if you buy good quality assets over a longer duration, your probability to make money will always be on the higher side. The third important asset class is basically mutual funds, which is an indirect route to stock market. Friends, mutual funds is especially suitable to people like us who are into the job market, means who are working in a regular job. For us to track the markets on a day-to-day basis may be slightly difficult thing. So mutual funds especially are suitable to those who don't have sufficient time for stock market observation, knowledge is not there, and basically who don't have much of a capital. So for them, the best way is to invest through the SIP route, systematic investment plan, whereby one can invest. Right now, if you see friends, 8,000 crore rupees is coming into Indian stock market through the SIP route. Now that is a huge amount, friends, that is primarily coming. So if one keeps on investing through SIP, obviously one can create good amount of wealth in the long term. Friends, in mutual funds, one can do SIP in three things. One is large cap diversified stock, second is index fund, and third is sector funds like banking and IT. So these three types of mutual funds, if you invest, your probability to make money will be always on the higher side, friends. So keep that particular point in mind. Remember, mutual fund is one of the good ways to create wealth over a period of time, because you can do an SIP starting from 500 rupees a month to the upper limit is whatever is your financial comfort level. The fourth important asset class is basically gold. Friends, gold is called as yellow metal and it has occupied lot of importance since the global meltdown. See, gold prices were 9,000 rupees per 10 grams in 2007. Gold was never considered as an investment instrument. But in 2008, when global financial crisis hit the world, friends, gold prices touched 33,000 rupees per 10 grams. Always remember that gold is considered as a safe haven and it is the most liquid asset after cash. So basically, whenever there is a problem at the global level, gold prices will always go up. Gold has an inverse relationship with stock market, macroeconomic data, and US economy. That means whenever stock markets crashes, gold prices are sure to rise. That is the same trend has been observed in 2020 when Indian stock markets crashed when COVID came and gold made an high of first 50,000 rupees per 10 grams and then 57,000 rupees per 10 grams. When IMF or World Bank says that the world economy is weak, gold prices will rise. And when US data is weak, gold prices will rise. So primarily speaking, in short, any bad news in the world economy is a good news for gold and any good news in the world economy is a bad news for gold. Always remember that basically gold behaves in an inverse manner. If you see friends, basically Indian households, then Indian household having 25,000 tons of gold. So gold is considered the second largest item in India's balance of payment after crude oil. Friends, in 2015, when the Chinese crisis came to light, when there was this commodity price crash, gold prices again went up from 25,000 rupees per 10 grams to 29,000 rupees per 10 grams. Remember one thing, friends, when the world economy is doing good, when things are stable, gold prices tend to come down. So the best strategy is that you should accumulate gold when basically globally there is stability. Is gold productive? Now see, this is a debate done by a lot of economists that basically gold is not productive since if you invest money in gold, it gets blocked. If you put money in equities and fixed deposits, then that money basically circulates in the economy. If you see friends, last 100 years return of gold, then return is only 6%. Last 40 years return of gold is 9 to 10%, whereas BSE Sensex is 16.5%. So thus equities outperform in the long term. That is something you always have to keep it in mind. Correct. This particular point is very important, very vital. The $1,000,000 question is that should you have an exposure in gold? Yes, friends, there definitely should be an exposure to gold, at least 10 to 15%, For the simple reason, as the world economy is integrated, if one invests in gold, obviously you are on the more safer side. And here one can invest in gold through the gold ETF, gold exchange traded fund, whereby you can invest in gold ETF and the unit comes into primarily the direct demat account. The benefit here is that you can buy these ETF units anytime from Monday to Friday between 9:15 to 3:30. So this really helps you to average out also and to make good returns also. Plus in ETF, that is exchange traded fund, the value of one unit is 42 rupees right now. So even you can buy one unit also. So even with lesser amount of money, you can accumulate these units. Property, friends, was a good important asset class between 2003 to 2013. But currently, if you see, property market is also facing problems because there is huge oversupply and unrealistic pricing. So even that has created a problem. Friends, in property, remember one thing, you should buy only if you are going to consume it. That means use it. Then definitely it is worth buying. But if you feel that let me buy property and then I will be able to sell it at a huge price or appreciation, trust me, friends, that is something, friends, one needs to be very, very careful here, because in this particular case, if things are not well, then obviously your money may get stuck. The current problem in property market is that so many new projects have come up, friends, that selling a second hand house will be a huge challenge. And on the other hand, the new projects which are coming are at a horrible cost, very high pricing. So again, that primarily creates a problem. Friends, in the current scenario, one should not buy property for living purpose because it will not serve anything. It is better primarily you have property if you are going to consume it for a long duration and not from an investment perspective. Remember, if you buy property from an investment perspective, there is a high probability that your money may get stuck into that. And as work from home has become a reality, hybrid model becomes a reality, one needs to be cautious about this. If we talk of insurance, friends, see, insurance earlier was considered only as a tax saving instrument, but today insurance has become very important. And two things are very vital in insurance, friends, term plan and mediclaim. See, friends, in COVID-19, lot of bread earners of the family have died. And this created huge financial issues for the people who were left behind. Hence, it is very important that today you should have a term plan and a mediclaim. Term plan is a very simple product in whereby if I survive the whole term, I don't get anything. But if something happens to me during the term of the policy, the nominee gets a huge amount. So that is why term plan plays a very, very critical and a vital role. On the other hand, friends, Mediclaim with a cashless facility will ensure that your hard-earned capital does not get blocked in hospitals and you get reimbursement easily. So that is why these two have become a very critical and an important asset class in terms of investment and your overall portfolio. Friends, always remember that if you do proper investing in challenging times, then obviously you will be heading towards financial freedom, financial independence. And in today's world, financial freedom, financial independence are two things which are very important and critical. So that is why both these things you have to keep it in mind. With this, friends, I conclude my part of presentation, and now we can go for question answer session. So please feel absolutely free to ask me any question you have about investments or even your personal financial planning. Please feel free to ask. Yes, ma'am. Ma'am, are there any questions, ma'am, which we can take up for discussion or any doubt, difficulty? Padma, ma'am?
Right now, sir, the questions are not been received from the students or the faculty.
Okay, okay, no
Faculties,
problem.
so you can continue, sir.
Okay, see, basically, what see in my whole PPT, see what we tried to highlight was, sir, that overall, if you invest on a regular basis, then you will be able to generate good amount of return over a period of time. Here, as I told you, that one should have a judicious mix of investments. On one hand, you can always go with a mutual fund SIP because in that case, the risk is relatively less, plus you get the benefit of diversification. And at the same time, you should also have traditional financial instruments like FD and Provident Fund, which should also be there as a part of your investment strategy. See, FD and Provident Fund will ensure that you get safety of capital. On the other hand, mutual fund will create wealth for you. And at the same time, you can also try out for something like investments in insurance. Insurance is very important, friends, because in the current scenario, if you see the way human life has become uncertain, it is very vital that you are properly protected with insurance. In fact, you will be surprised. First time after India's independence and the opening up of this insurance sector, first time people have approached insurance companies for getting themselves insured. Otherwise, insurance is always a push product, correct? But this is the first time that after COVID-19, people have realized people have realized the importance of insurance in this real world, friends, because the way people lost their lives, that is something very critical and important. This is one thing which we have to, friends, keep it in mind as far as our things are concerned. Friends, here one thing, that as the world economy is getting more and more integrated, correct, world economy is more and more, friends, integrated. So primarily thing what will happen is that basically as far as world economy gets integrated, if you have an exposure to gold, see, gold is something which will give you return. If you invest in gold, friends, that will give you good amount of return even when the world economy is not doing well. And at the same time, one can buy gold ETF units in smaller proportion also. As I told you, friends, that one unit is available for 43 rupees. So if you buy 100 units, you are just spending 4,300, which is equal to basically buying 1 gram of gold, correct? So this will really help you to average out your cost also, and at the same time, in the long term, you can really create good amount of wealth for yourself. And plus, friends, today if you see, US is having a problem with Russia, US has a problem with Afghan, US is having an issue with China. So the point here is that there are so many geopolitical problems existing at the global level, that if you have investments in gold, so obviously whenever there is a problem at the global level, gold will give you good return in times of distress. So having gold in your portfolio is always something which you can try to figure out. So this is again my humble advice, that one can invest small quantity in gold and can make good amount of profit out of that. Friends, another vital thing is that if you decide to invest in capital markets and other things, you have to track what is happening at the global level. Tracking global things is very important. If you track things at the global level, yes, your probability to make money will be on the higher side. See, today, if you see, markets are down 1200 points. Now, is there a problem with Indian economy or Indian macroeconomic factors? The answer is no. We are in a far better situation. Our GDP is growing. For the last 8 to 9 months, GST collection is more than 1 lakh crore rupees. So here the problem is not with Indian macro factor, but the problem is related to US Federal Reserve. And hence one needs to be very update that what is happening at the international level. So these are certain things which we need to keep it in mind. Yes, friends. Any other doubt, difficulty?
Sir, if with your permission, may I ask a doubt, please?
Yes, please, ma'am,
Sir, yes,
please.
sir. Sir, what should be the investment criteria when we are investing in mutual funds? Like
Okay.
there, yeah.
See, ma'am, basically, whenever you decide to invest in mutual fund, the first thing you have to see is that basically how old is the fund and what has been the past track record. See, consistency is very important when it comes to mutual fund. Consistency. Consistency means whether the fund is able to deliver good returns regularly, consistently, or it is delivering returns in an intermediate basis. So it is very important that a fund delivers returns on a regular basis. So that is point number one. Point number two, ma'am, that whenever you decide to invest in mutual fund, you should always try to go with basically this thing, four types of SIP. One in an equity diversified fund, which is very important, which will 100% invest into stock market and give you good return. Second, a sector fund in which you can go with a banking sector fund or an IT sector fund, because banking and IT are the backbone of any economy. Third, one can try with basically this thing. Second is sector fund. Third is index fund. If you invest in a SDFC say, Sensex plan, again, it will really give you good returns over a period of time. And fourth is international mutual fund, which primarily invest outside India. So if you have this kind of diversification, ma'am, this will really help you to create good amount of wealth over a period of time.
No, thank you, sir. So in your opinion, as an investor, I should have a portfolio comprising more of like mutual funds and then gold investment and the traditional mode of
Yes.
investment.
Yes, ma'am. Yes.
So and capital market, if I need to invest, then it has to be after proper analysis and studies.
Yes, ma'am. See, basically what happens is, na, if you invest directly in stock market, na, you will compulsorily need three things. See, one, you have to give your personal time. Unless you give time, obviously you cannot make money. Second, you should be well read. You should know what is happening in US, Europe, China, Japan, what India's macroeconomic factors are. To be very frank, this is not everybody's cup of tea because of time factor. Because if tracking all these needs considerable time and reading. And third is you need bulk capital also. For example, today, even if you buy, say, 10 Reliance Industries, you have to pay a check of 24,000 to the broker. Now, see, many people may not be comfortable paying so much amount in one shot. So that is why mutual fund scores a blue point. See, basically, the benefit in mutual fund is what? That you don't have to give time because there is a fund manager who is completely giving his time. Knowledge is not required. The fund manager will decide what to buy, sell, and he can invest even 1,000 rupee or 500 rupee per month and he can start investing. So that is why mutual fund of late has become very popular and investor friendly also.
True, sir. True, sir. Sir, and as according to my knowledge, to invest in the capital market, we need to have a demat account and we need
Yes,
to
yes.
follow all the procedures.
Yes, you will
That,
have to open, see, you will have to open a trading account, a demat account, for which you have to have a proper PAN card, Aadhaar card, 6 months bank statement, all these things you have to submit to the broker. The broker will open your trading and demat account, correct? So
yes,
these are important things which you need to keep it in mind.
yes, sir. Sir, and sir, now if you see the current investment that is in the traditional methods that we have been doing since so long time, people generally invest in the this thing FDs and all. But
Yes.
nowadays, FDs is also not giving that good returns. If you
Ma'am, actually, see what has happened. Ma'am, I agree that FDs are not giving that good return, but that is only a matter of time. Because trust me, basically, FDs will start giving very high returns soon because interest rates are likely to go up. Correct. So that is something basically where FDs will start giving you good return. So that is also we have to keep it in mind.
Okay. Sir, can you tell us about something about the government securities and the treasury bills and all that? That is also, I suppose, one of the mode of investments which is used, but
Ma'am,
not many people are aware of that, sir. If you could highlight something about that, sir, I would be very
sure.
grateful.
No, no, sure, ma'am. See, basically, government bonds, government securities, those things can be done. But here, what happens is that basically, in those kind of securities, no, the problem is Okay, primarily the minimum ticket size is 10 lakh rupees. So that is where the problem comes. The minimum, see, yes, there are a lot of government state bonds also. For example, if you take Uttar Pradesh Power Corporation has issued bonds, then Meghalaya government, these are state government bonds. So there is no risk. But the only point is the minimum ticket size is 10 lakhs. So even if you buy one bond, you have to pay 10 lakhs. So that actually hinders the retail investor, to be very frank. So here, what rather one can do is that one can go with investment products like say Bajaj Finance FD. Now, in that minimum ticket size is only 25,000 and you get interest rate of 7.35%. And obviously, see, Bajaj is a brand name everybody knows, and it's not something that it will run away. So basically, these are options available to a retail investor when one can try out.
Thank you, sir. That was a very informative aspect that even I came to know about, because as an investor, when I
Yes,
think about investment options, I always prefer to go by the traditional methods, whatever is
yes, yes,
available. And these are some methods which are there, but people, due to lack of awareness, it is not there. And in a way, thanks to you, sir, thanks to you and the management of our college for taking up this initiative of creating this awareness, because this awareness is what is most important. As
exactly, ma'am.
an Yes, sir. And from an investor point of view, actually the investor should be knowing lot of things, like there are so many avenues of investment, but majority of us, we lack the awareness, and that is the reason why we don't explore these opportunities of investment.
Exactly, ma'am. Exactly. See, actually, if I tell you, no, ma'am, see, if one does proper, if you see, if for especially for our faculties, I would like to say that since you have a stable job, stable career, if you just do two things regularly, every month a proper fixed deposit and every month a good SIP of say 10,000 rupees a month, trust me, you will make a real good amount of wealth during your working span.
So what should be the percentage of our income that should be going as an investment or as a savings, sir?
See, basically, ma'am, what happens is, see, whatever you are able to save after all your meeting regular expenses, na, at least see 50% put it in FD so that you are safe and secure. No doubt in that. Apart from that, if another 50% which remains out of that, 25% can go into mutual funds, 20% can go into gold, and 15% into insurance.
Okay, thank
Yes.
you, sir. Thank you,
Today,
sir.
today, ma'am, insurance is also equally important because see, in COVID-19, if you see, na, so many people lost their lives. And to be very frank, most of them were bread earners. So insurance today is no longer a tax saving instrument, but a very vital instrument and what we can say a predominantly important one. So that is why you should invest in insurance, ma'am, and one should take a term plan.
Okay, sir, in insurance, the medical insurance also is of
Yes,
primary
is
importance, no, right?
yes, ma'am. Yes, yes. Mediclaim is very important, ma'am, because in Mediclaim, if you don't have proper Mediclaim, obviously that will create a problem. Because without Mediclaim, what happens is if you get admitted to a hospital, your hard-earned money will be taken for a ride. So that is something very important.
Thank you so much, sir, for all this information. It was
Thank you, ma'am.
indeed very informative, and me as a investor also, I learned a lot of things from you, sir. And I hope that my fellow faculty members have also gained a lot of inputs from this session, sir. This session, friends, this session is in 3 sessions. This will be conducted in 3 sessions. This is a 3-day workshop, and we are grateful to Dr. Aditya Srinivas for giving his valuable time and taking this session for all of us. I would request Shah sir to say a few words.
Hello, Aditya sir. It was a very nice session related to investment and insurance benefits which would be given to the investors during the Corona call. You are rightly informed about the cashless facilities related to insurance, and being the first part, the first session, the second and third session would be more interesting to hear from you. Thank you from my side. Thank you, the organizing committee of the S.S.T. College, as well as the Sainas ma'am also, Sania Sheikh ma'am also. With this, we are concluding the first session of the 3-day
Sure.
workshop of the faculties. Aditya sir, we will be meeting you tomorrow at the same time. Thank
Done,
you.
sir. Done. Thank you so much, sir. Thank you. I also enjoyed sharing and interacting my knowledge. Thank you, sir. Thank you. Thank you, ma'am.